Boom. Boom shakalaka. That's right, folks. Welcome back. We have a great one for you tonight. Of course, myself, Texan Whale. I am flying solo tonight. My wingman Bronze is taking the night off, but he'll be back with us next week. Don't you fret. We do have a good one for you. We got a great one. We got a great one for you, folks. But before we get started, of course, don't forget to subscribe, like, comment below. Every little bit helps. And we certainly do appreciate you. Now, tonight we're going to be getting into the Bitcoin chart as we always do. We are going to be talking about the LTC halving, which occurred yesterday. So if you haven't had an opportunity to get into that and take a look, we'll talk a little bit about that and kind of tell you where we're at with all of that. Be talking about the Coinbase as far as their public launch of Base. That's a layer 2 blockchain, and that's happening next week. And then, of course, we're going to be going into, well, Phemex. This is more pertaining to contract trading. I figured we'd maybe get into a little bit of the technicals tonight and give a little bit of insight of what I do when it comes to contract trading. It is certainly one way to make some major gains, but also one way to get yourself wrecked if you don't know what you're doing. So I'm going to give you a little bit of insight of what I'm doing. Of course, none of what we're talking about tonight is financial advice. I mean, shoot, what do I know? You know, you follow me, you don't even know me. But I certainly appreciate you tuning in. Bronze certainly does as well. But let's get right into it, shall we, folks? So I'm going to go ahead and pull up the Bitcoin chart. Normally, this is where I say, Bronze, let me know if you're able to see this. Let me pull this up here. Hopefully, you guys are able to see this. Make sure screen looks good. All right, so we are taking a look here at the Bitcoin chart as it pertains to 4 hour candles. And as you can see over the past, call it 1, 2, 3, 4, call it 5 days. Let's go out a little bit further. There's that nasty candle. We've been pretty much been going sideways. Now, some would say that is a downward trend. And I would tend to agree, but it's not severe by any means. So, if you take a look at it, not extreme volatility overall. We seems to have its ups and downs. Take a look at the volume down below. We may have had a little bit of an uptick and then shirk back down. But for the most part, it seems to be par for the course. We're not seeing any extreme trades going on or extreme volatility one way or the other. Now, of course, if you're taking a look into the smaller time frames, that's when the perception is that these are huge. But realistically, folks, if you're kind of just along for the ride, you're investing in Bitcoin and you're not contract trading. Um, these are not major swings by any stretch of the imagination. So now, not to say that those swings aren't coming. They're coming up, down, left, right. You kind of know the drill. We do see those extreme trading days. We haven't seen that in a while. Some would call this the calm before the storm. So I think that we're in for some extreme volatility moving forward. It just hasn't been over the past week, and I don't know that wouldn't bet my bottom dollar that it's going to happen tomorrow. But I do feel, of course, in the crypto space that, as most do, we're gonna be moving forward. We're gonna be tracking upwards after this. I don't feel like we're gonna be dipping too far down. If I had to guess, as far as ranges, we're probably anywhere. We're gonna be going anywhere up towards 34 to 45 for the end of the year. But we'll see how that plays out, and it's all based off of the news, and of course, we couple very closely with traditional stock markets. So if you're trading in the space, you always want to make sure that you're trading in traditional markets, or at least if not trading, paying attention to it because there is value there. We tie very closely with traditional markets. And folks, that's just my 2 cents. Of course, never financial advice. So that's where I feel we're going for the Bitcoin. But we had some news this week. One of those news that's kind of really over the past few days was the halving of LTC. It was Litecoin. Let me go ahead and pull this up. This article is from the Daily Hodl and kind of covers over what happened over the past week or past 24 hours, really. But there was every few years, like Bitcoin, LTC or Litecoin goes through halving, which means every time that you are mining this, that halving means that it gets harder and harder to mine. So the question is, what happens at the point of the halving? Now, if you take a look at what this chart's indicating here, every time halving occurs, it has a tendency to retrace. So we're kind of at that point, and the expectation is that there is going to be some kind of retracement, at least in the near future. You see that it kind of retraces down and then it spikes back up before hitting that next halving, which happens to occur every 5 years, depending, because it does change over time. Now, if you take a look over the price action as it changed, as it pertains to the time that the halving occurred, it's actually down. Now, this is kind of falls in line where, that's why you want to pay attention to some historical charts. You'll see this retracement. We've seen it time and time again, and it looks like this may be no different. So, having has occurred, a lot of folks said that the pricing was already in. And if we were to go ahead and pull up the chart for Litecoin, let me just pull that up. I think that you'll find that the price point, the top was already in. In fact, it's already dropping off the top 10 for coin status. Bear with me while I pull this up here, folks. So if I pull up CoinGecko here, you'll see very much that this thing has dropped over the past 24 hours. Now, let's go back even further. You'll see that we were well above 100, which is why many were calling the top already in. We hit a high right here. They're saying 113. I think that varies depending on the chart that you're looking at. I've seen 107, 108, 109. But you'll see that the price point hit a high on July the 2nd, which is roughly about a month ago, and it's been a downward trend ever since. The expectation is that that downward trend continues until a new bottom is found, and then it's going to start to retrace back up. So, we got Bitcoin halving coming up, but that's not until next year. It's just something that you're going to want to pay attention to as well. And all you miners out there, I know that you're paying attention to that because that's going to impact your bottom dollar. So, with that all said, that's all about what's going on for Litecoin and the halving news for this past week. One of the bigger news that everyone's kind of talking about is taking a look at the layer 2 blockchain that Coinbase is setting up for a public launch. Now, that public launch is to occur next week. Let me pull up an article. This article is, bear with me. This article is from CoinDesk. Make sure you guys can see that okay. I'm going to go ahead and expand this out just a bit and get a better bird's eye view on it. So, set to launch next week. Now, that is August the 9th. It is their bridge and they're bridging it to ETH, which certainly makes sense because realistically, in my opinion, there is no other chain that you want to be a layer to a layer two rather than ETH. Of course, you have options out there, but realistically, if you ask me, there's no real option out there. Now, Coinbase is actually seeing a fairly significant uptrend in their stock price overall. A lot of folks are betting on this. Some analysts are actually saying in the traditional markets that it's way overpriced at this point, and we should see retracement. All that may be true, and it may be baked in, but understand that this is one alternative, one way for traditional market traders to kind of touch or delve into the crypto space without actually having to get into the crypto space. So, uh, big one coming, and mark your calendars. That is going to be for next week, August the 9th. And let's talk a little bit more about what base is what they're calling it, Coinbase, and their layer two base is all about. Now, this comes directly from their site, and they're kind of introducing and giving you a little bit more. I would say this is more like an FAQ. Make sure you guys can see that there. So it's a Ethereum 2. It's a layer. It's a Ethereum layer 2. So it's based off of the Ethereum chain, basically piggybacks off of it. As they indicate, secured by Ethereum, right? And of course, Ethereum has all that security and scalability. But what they don't have when you're a layer 2 is you can reduce the overall gas fees when you piggyback off of it. And I'm sure that's in part what they're looking to do here. The overall, it's saying empowered by Coinbase. Well, they're just basically tooting their own horn. Of course, you can get through Coinbase. It's one of the easier ways to get, at least here in the States, compared to many of the other current or traditional models in the crypto space. This is one way for the normies to get their hands on it. And talk about big features, small fees. Well, yeah, that's right, folks. It's a fraction of the cost that it would be for gas fees that you would have to pay if you were just trading Ethereum straight up. So they're touting that, of course, and it makes sense because what they're saying is set up a gas list right here, set up gasless transactions for your dApps with easy developer APIs for account abstraction and security. Build multi-chain applications with easy-to-use bridges. Basically, cheaper if you put it onto our chain. Build your apps on our chain. And I feel like this is a good way for a lot of the folks here in the States, a lot of the companies and projects in the States to kind of start to build off of something, a network here that is recognized and legitimate. So just another way for Coinbase to kind of continue their dominance here, at least in the States. Indicating that it's open source. Of course, it's open sourced. They say aims to be decentralized. Well, I don't know about that. Permissionless. I don't know. I feel like they're kind of setting the rules. It is their chain. And I don't know, folks. I got to be honest. I feel like this is the biggest, I don't want to call it lie, but it is certainly not used properly. Decentralized, permissionless. No. I almost feel that Coinbase says that something does not belong. They will go ahead and make sure that it gets shut down in one way or the other. Now, they're saying, well, what's a layer two network? Of course, it talks about improved scalability and efficiencies. That's what the aim of any layer two is. Increased transaction speeds. As you guys know, Ethereum, at least in its current state, is not the quickest. Reduce gas fees. Yes, we've seen it. Ethereum can get bloated, especially when the network traffic gets very high. That's why we need to see Ethereum 2.0 come out. And then consistent security measures and decentralization based off of layer one, meaning Ethereum. So as Ethereum continues to get stronger, so does base. So, all that to say, we'll have to see what Coinbase is going to introduce to us next, what that's going to look like, and you know, see what happens. August the 9th. It's coming up, folks. It's coming up quick. So mark your calendars, pay attention, and should be interesting to watch their price action on their stock and on a traditional stock exchange for Coinbase, at least over the next week or so. Be curious to see how it actually pans out the 24 hours after base launch. Well, all right. We wanted to take the time. I figured since Bronze was not here, kind of go through a tutorial. Now, this is not going to translate well into any type of radio podcast, so because it's going to be highly visual. But so if you are listening to this via radio in the car, please do not attempt to look at your phones while driving. We want to make sure that you guys remain safe. This is going to be going over contract trading, and again, anything that I say here is not financial advice. And just some of the I get a lot of questions about contract trading, and I figured I'd share it here. Take the opportunity since it's just you, me, and the screen. So what do I use here? Is a trading platform called Phemex. I'm going to go ahead and pull it up here. But what you want to do with Phemex is now Phemex is one of those uh, certainly not decentralized. It is a centralized platform where you can go ahead and make exchanges overall. Now, bear with me. I'm going to go ahead and pull it up. Now, these type of exchanges can be a number of different ways. And let me make sure you see that. One of the now, and folks, I just want to make sure that you guys understand this before I even continue. This is not paid advertisement. I'm doing this out of the goodness of my own heart. Now, the folks over at Phemex, you see that you want to reach out to be happy to strike up a deal, but I figured I use it. It's like drinking Coca Cola. I like Coca Cola. I have no problem saying that. I have no problem saying that I'd recommend it. So, just like Coca Cola, Phemex is my preferred trading platform for what I do for contract trading. Not necessarily spot trading, but of course, you can do that here as well. Now, they do have the ability to do spot trading and margin trading. But again, I want to talk specifically about contract trading. Now, what is contract trading? Contract trading is basically trading off of any type of futures. It allows you also to um, leverage your dollar or whatever your cryptocurrency. Let's call it USDT because we'll be using this as an example here. You can go and take that one USDT and leverage it and based off a contract and make it $2. So you're basically, as you start to trade your $1 you put in, you're putting in $2 because of the contract. So it's really, you're getting any of the benefits from that $2 trade based off of the $1 you put in. I know it's a little bit confusing, but it'll make more sense once you start to see it. Essentially, though, there's anytime you see an increase, or rather a decrease and an increase, it's based off of that 2x, that $2, not the $1 you put in. So because you're seeing that increase is going to be higher than you normally would, but also that decrease from your wallet is going to be lower than you would. So, as an example, if it increases 2% and you are trading 2x, you're actually getting 4% back. Now, same goes if it dips. If it dips 2%, you're actually losing 4%. And this is where it kind of stings a little bit. This is one of those type of trading scenarios or trading actions that you could do where you can completely get yourself wrecked. Now, there's also liquidation marks, which means that if you reach a certain level, let's say that you are, I'm going to say you're shorting it, right? If the price action starts to increase, and depending on the type of leverage that you're putting in there, you hit a particular point, you could lose everything. So, but of course, the nicety of this is, and this is kind of where you want to be careful and always be mindful when you're trading this. You can make some big money or you could lose it all. Again, this is really for more professional trading. Now, what's nice about Phemex is if you want to dip your toes in it, you do have the ability to learn how to, right? They do have academies, they do have a learn and earn, which kind of is very similar to what Coinbase has. But they also have mock trading, allows you to trade contracts, basically zero risk. So you kind of get to play a little bit before you actually put some money in. Now, what you would want to do is, of course, once you have your account set up, you're going to want to go ahead and get some money into your account. You start with the wallets, you create the wallets here at Phemex, transfer it from your existing wallets. For example, for me, it's MetaMask. Transfer from MetaMask goes to this particular wallet. And let me just pull this up here. So, as an example, what I did here was, let me go ahead and close this up. I have an account that I set up for this, and I transferred, it was just over $50 into the spot account. Now, spot trading is just trading. If it goes up a percent, then your portfolio, whatever it is that's currently in there, your asset goes up 1%. This is just as if you were trading stocks without any type of leverage. But we're not looking to do that. We're going to look to get into our contract or contract trading. So we're going to go ahead and transfer. And what I have right here is I have $55 in ETH. I'm going to go ahead and take that. I'm going to take it from the spot account, put it into the contract account, and go ahead and take all of it. You say, you sure you want to do this? And we're done. Go into the contract account. It should have transferred that ETH in. And a lot of the contract trading on Phemex is in USDT. So now that I've converted into one wallet, I'm going to go ahead and take my ETH and I'm going to go ahead and convert it specifically to USDT. So ETH, USDT, take all of it, get a quote, got to confirm, and it gives you a little countdown here. And boom, we've just converted to USDT. Now, what do we do with it? Well, we're going to go into contract and we're going to go into, well, you could go into any one of these, but we're going to go into coin. You'll see that this is actually trading as BTC USD. I'm going to go ahead and I've actually created some favorites. Bear with it while it catches up, as you can see. We're going to go into BTC and you'll be able to make some trading here on the right hand side. Now, before we get into that, I've got some rules. Now, these are my rules. This is not something that is financial advice by any means. But it's just something that I do want to make sure that you guys are aware of. And this will help you if you're starting into this and not getting wrecked. Now, some of the rules that I have is, I got 7 of them. Now, the first one is Trade what you can afford to lose. Now, obviously, I feel like that's kind of a no-brainer, right? We kind of know this in the crypto space. You want to, like everything else in the crypto space, trade only what you can afford to lose. So, rule number one, right? Rule number two for contract trading. Now, this again is Texas and Wales rules, and again, not financial advice because what do I know? But these are just my rules, and we got seven of them. Never walk away. What are we talking about? Never want to walk away or go to sleep when you have a trade open contract trading. We talked about liquidation. Again, you can very easily get liquidated in a matter of a moment, especially the way that crypto trades so heavily in one direction or the other. Volatility is just amazing in the space. You never want to walk away and have have your all of your not only profits if you're in profit, but all that trade just get completely liquidated. Now, I know that, and you may already know that you can set limits, which means that if it hits a particular limit, whether it's take profit or if it's a way to ensure that it doesn't hit, say you're willing to afford to lose 5% stop loss. If it hits that 5%, it should trade. However, I have seen it, folks, in extreme volatility when the thing is starting to just go absolutely crazy, it can blow right past your stop trade or your stop loss and go right down to liquidation. It is just one surefire way for you to get wrecked. So never walk away. Um, and, you know, just never walk away from the screen. You're trading with your hard-earned money. Make sure you're paying attention. Third rule: never while you sleep. Now, what I mean by that is, don't wake up in the middle of the night because I know you do it. Shoot, I feel like most of us do it in this space. We roll over. We start paying attention to whatever project we're paying attention to at the moment, or we're taking a look at Bitcoin, or taking a look at Twitter space and see what folks are talking about. Well, this is just one way for you to lose some much needed sleep, number one, because once you get into this trade, you have no choice. You really should have no choice but to stay awake and watch it. So, number three, don't trade while you sleep, folks, especially for contract trading. It is just another way for you to get wrecked. Number four, stick with tried and true BTC. The point here is to trade as much on BTC as possible. And the reason for it is because it usually impacts the entire crypto market. Now, if you're going to trade other tokens on any particular platform via contract trading, what I would recommend is you want to go ahead and make sure that at the very least you're paying attention to BTC along with whatever else you're trading, because BTC can swing the entire environment in one direction or the other. Number five, RSI trades, relative strength index. You want to make sure that, at least for me, this is, again, a method that I use. RSI trading is one way to start to really pay attention to the market and good buy action and sell action. We're going to talk about this in a little bit, but my rule specifically is, and I only watch RSI for the 15-minute or higher. I don't want to go into 10, 5, 1 minute, 1 minute. Don't ever do that, folks. Pay attention to RSI at a reasonable time frame. Mine's 15-minute. And anytime RSI is below 27, that's when you want to buy. Again, for me. Now, if you're shorting, you can short in my rules 72 or above. But again, not financial advice, just something that I do personally. And we'll talk about that in just a little bit. Now, selling. When you're selling, you want to base it off of the previous uh, recent action in the market. And we'll talk about what that kind of looks like here in just a bit. But realistically, the RSI action has a tendency to remain within certain set of parameters as long as there's not extreme volatility. And you want to base it off of those, uh, the historical time frame, usually within the past 24 hours, as when you want to get out. Get out when the getting's good. And lastly, never trade during volatility. And I'm talking about extreme volatility. If this thing is starting to take off one way or the other, you want to make sure that you're doing your very best to stay on the sidelines and keep your money in as USDT. Now, this is not spot trading, this is contract trading. So these extreme swings, a huge swing up, could mean that it could come crashing down. And next thing you know, you're liquidated. So just those are my 7 rules, right? I'd say that these are my rules. This is something that I've kind of done over the time, something that seems to be, for me, tried and true way to stay safe with my contract trading. Now, as the example, I think what I'll probably do is I'll probably start to share my trades. I want to see, I think over the next 30 days, we'll track my trades starting at this $55 trading input. So we start with $55, folks. And when we talk about trading, there's a number of ways that you could do it here. You could trade at the market. Market price is right here. So, example, market is 29,186 and 70 cents. Now you can trade on a limit, and you can set that limit price. So let's say we don't want to buy in until it hits, say, 29,200. So you can set those limits. And you can set it based off of whether or not you want to trade the entire $55, so half of it. And here's your cost. Here's your cost for opening long, and here's your cost for opening short. Or you can increase it to the entire set amount of $55, which is what we're going to do here tonight. Now, you do have the ability to set your leverage. This is the part that kind of can get you wrecked. You go, we have $55. I could go ahead and just say it's 2x. So now my $55 becomes 110. When we do that, and if I were to purchase it, it then starts to have that increased value to it. So as the price increases, my profit increases 2x. But on the other hand, as my profits, as the stock goes in the other, rather the trade goes in the other direction, that 2x is now hurting me twice as hard as it did with that lone $55. What's interesting here at Phemex is specific to BTC. You can go 3x, 5x, 10x. Shoot, you go all the way up to 100x. Now, when you do that and you start to take a look at that, that's very risky because then you're sort of taking a look at liquidation ranges. Now, I'm going to give you an example. I'm going to go ahead and start our very first trade. Oh, shoot. Let's go high. I'm going to go ahead and trade as high as 25x. So that $55, let me just pull this up. $55 times 25x, now has a value of 1,375. I have it set to isolated, which means that it only impacts this particular trade. I'm going to go ahead and confirm it. And when I was talking about RSI earlier, this is kind of what we're talking about. Now, this is a 15-minute, and I have the RSI showing below. Now, if I was going to go ahead and short this, I would always want to take a look at the RSI. You can kind of see the RSI kind of in purple just above here, right around here. You also see the RSI to the right. So crosshairs are currently on 75. Now my mark is 72. Anytime that I see 72 hit for a buy, that's my signal to start to short. Now, you could start to go up and then it could retrace back down, and usually that's the case. We're already in a kind of a downward trend here. I caution, though, of course, really trying to time the market because it could retrace back up. So, what I'm going to do is I'm going to go ahead and I'm not basing my trade right now off of RSI. So, if it were to hit 72, which was my initial 72 on a downward slope, I'm shorting. So 72, and then I'm hoping that this thing will continue to downtrend. And then I have to take a look at the price action and decide, do I want to sell here when it hits 49 RSI? Do I want to try and hope for 42? Now you saw it came all the way back down to 25. I mean, that's really the perfect trade, hindsight being what it is. Shorting it at 72, getting out at a low number of 25, 26 ish. Same goes when buying for long and hoping that this goes up. You're going to want to go ahead and try to get in. My rule is 27. If I hit 27 down here, especially even if it's downtrend, that's fine. 27. My hope is that I want to hold on to it and try to get out. Typically, I don't really try to go for the full bounce all the way up into the opposite range. I usually go try to get somewhere in the traditional price action. In this case, 61 would probably be where I'm getting out, 60, 61. Then I'm watching and waiting. But I'm going to go ahead and take this. We're going to go ahead and take the whole $55. And our RSI right now is 41, but this is not really an RSI trade. We're going to go ahead and bet this long. And it's going to go ahead and open the trade based off of once it hits the 29,200. Now, as you can see, it's already got in because realistically, what I did was I bought at 29,200, but it's well it we had some folks that were willing to sell us at that price, but our entry price came in right around market because we got in lower. Now, if you take a look at this here, when we were talking about liquidity or getting liquidated, let me see if this is displaying. I want to show some indicators here. One of those indicators is the liquidation rate. Now, if you take a look here, you'll see that the liquidation price is indicated as 28,157. Right. So if the price point hits 28,157, let's say we see a dip all the way down here, I'm out. I lose it all. I lose all $55. Now, we got in at 29,179, and you'll see that our increase is already up 1.27%, so we're up 67 cents. Not a big deal. But, this says, well, that's got to be an extreme dip. Yeah, sure, taking a look at a 15-minute, but take a look at a 4-hour. You'll see that the overall dip for this is not as extreme as you may think. So here's the liquidation price here, folks. Now, you can get out at any time, but I'm betting on Bitcoin in the long run. And again, this is just one way that you can trade, but it's certainly one way that you can get wrecked. So, well, I appreciate you guys checking it out. If you have any questions about it, don't hesitate to reach out to me directly. But again, not paid advertisement here, folks. Not something that Phemex has reached out to me. And again, anything that we're talking about here is not financial advice. But Again, I just wanted to share some of the rules that I feel is very important for contract trading because as far as the rest of it's concerned, well, none of it really does matter. I mean, when you're spot trading, it can go up as long as the damn thing's not going to zero. And we all know that Bitcoin isn't. You could just put it in there and forget about it, walk away. Contract trading is not one of those things that you can do or should do. You should never do it. Plain and simple. You're contract trading, you're talking about extreme volatilities, you're talking big money gained, big money lost, almost a surefire way to get wrecked. So take a look at it. Let me know what questions you have about it. But I did want to take the time out because I am flying solo tonight and I didn't want to bore the heck out of Bronze. So we appreciate you guys tuning in tonight and taking the time. Let us know what you got. We look forward to seeing you guys next week. And guys, we'll be right back. Have a good night, guys.